Hey guys, welcome to this short video titled the 30-day roadmap for a new controller and CFO. So we've landed a new position as a controller or CFO, and hopefully my videos and my courses played a role in you landing this position. So this video today is going to be about how to succeed in this position, breaking down the roadmap into 8 different areas: financials, budget, internal controls, systems, month-end, people, compliance, 90-day roadmap. So we're going to dive into each of these sections and talk for a couple of minutes. What are the things to look for when you're starting this new position? This is based on my experience working at 6 or 7 different companies as a controller. And each time I onboarded in a new company, I looked at what's already working in terms of procedures and policies and what needs to be added to succeed in this role. So if this sounds good to you, stick around and let's dive right into it. All right, so the first area we're going to be looking at is financials. So we want to get a hold of the financial statements of the company for 12 to 24 months. So we want to look at the monthly financials, income statement, balance sheet, statement of cash flow. With the income statement, you're looking at trends in revenue. You want to see that revenue is increasing. Hopefully you didn't join a company that's going to go under in about a month or two. Look at the expenses. Are they trending with revenue? Or are they trending to grow faster than revenue, less than revenue, right? And look at net income or loss and see if the company is able to generate profit out of its revenue. Look at the balance sheet, right? So you want to look at the cash amount, especially if the company is making losses instead of profits, and see if the company has enough cash to have enough runway to reach profitability. And then look at the working capital calculation, current assets minus current liabilities, to know that the company is able to fulfill its obligations to other stakeholders. Okay, so that's with the financials. I will look at the cash flow statement, especially the cash flow from operating activity. I want to see that the company is generating cash flow, free cash flow from operating activity. And then if it's not, and it's relying maybe on debt to generate or to fund its operations, I want to look at the debt level. And then I would look at the debt agreement for each of the outstanding debts to see when it's payable, what are the terms of that debt, and things like that. So that's in terms of financial. The next area we're going to look at is going to be budget. So a company sets a budget that becomes the Bible for its operation, right? The company sets a 5-year plan typically and work its way backward into what's going to be the next year budget. So you want to look at the actual versus budget, and I would focus on the trailing 12 month. I want to see A, learning about what the budget is, and B, learning about the trend, whether the company is able to adhere to its budget, right? Look at that and gain an understanding of that. And then the other aspect of the budget is understanding how the company communicates its budget. So this comes from speaking to your team. So if you're the controller or CFO, you're going to have a team working under you. You want to speak to them and understand how we're communicating this budget to the department heads. We're sending them the budget beforehand, and hopefully we are communicating the actual versus budget by department to these department heads on a certain cadence, whether it's monthly or quarterly, so that they understand how they're operating or how they're performing against the budget that they have. So that's in terms of budget. And also, all of the areas that we're discussing here is going to be available in this document that I'm going to leave a link to down below. It's going to have all the different categories, tasks, and contexts that I'm explaining in each of these areas. Go ahead and download this from the description below. Beyond this summary cheat sheet, I'm going to create a toolkit for new controllers and CFOs that I'm going to have on my website pretty soon. So if you download this free cheat sheet here, you're going to be notified when my toolkit for new controllers and CFOs is ready on my website to download. And it's going to be an entire folder with all of the policies and all of the checklists that you need to succeed as a controller or CFO. So this is in terms of budget. So we talked about financials and budget, and now we're going to talk about the next area, which is going to be internal controls, which is a pretty important area. So let's talk about that. All right, so the next part we're going to talk about is internal controls, and I divide that into 3 parts: bank, and then policy, and then reconciliations. Okay, so with the bank, you want to get an understanding of who has access to the various bank accounts, right? So get a hold of what, usually you have one main bank relationship and maybe a secondary bank that you deal with. So you want to know who has access to the bank, and then who has the approval rights or signatory rights to the payments for the bank. So usually a company will have a document that includes the levels of signatory or approvals, and this document usually is reviewed and approved by the board of directors. So you want to see who can approve the different levels of payments. So typically companies, for example, for payments up to $3,000, only the controller is required to sign off on it. But payment beyond $3,000 up to $100,000 is the controller and the CFO. And then payments beyond $100,000, then it's going to be maybe another C-level or another officer of the company required to sign on that payment on the bank. So you want to get a hold of that document, and if there is no document, well, that's fine. Make a note that there is no document that exists today, because that's going to be something that you need to put together yourself now in your next maybe 90 days. Okay, the second area is going to be policy. There are certain policies that you want to have in place in every company in terms of accounting and finance function. The first one is going to be T&E, travel and entertainment, which details what is approved and what is appropriate in terms of, flight economy versus premium economy versus business, who is allowed to travel on these different cabins in a flight. What are the approvals that are needed before a trip even is booked. So T&E policy is pretty important. And then accounting policy, I like to have an accounting policy that details an accrual policy. So an accrual policy, for example, will say, if I have a vendor spend over $5,000, that needs to be accrued, but under $5,000 doesn't need to be accrued, and it can be just booked whenever the invoice is received, right? This is going to be just to make things faster. So 5,000 is obviously just based on my materiality levels, but you can examine that for yourself and see if you want to make that threshold 1,000, 5,000, 10,000, depending on how big your business is. In the same accounting policy, I would have a capitalization policy. So a capitalization policy might say, hey, for laptops, we are just going to expense the laptops. We're not going to capitalize them, excuse me, and depreciate them. And in the same policy, I would have a section for revenue recognition that details the criteria based on the type of business that we're in, by which we recognize revenue based on ASC 606. Okay, so this is in terms of policy, what I like to have as a bare minimum for the company. The other area in internal control is going to be reconciliation. Reconciliation of the accounts is a good control to have to minimize intentional or unintentional errors overall. So a reconciliation, the definition of it is that you are comparing or validating or supporting the balance on the balance sheet with some sort of an outside document or a detailed working paper that shows the calculation of that number. So if we're talking about accounts receivable, the validation or support for that is going to be an aging schedule by customer or by invoice that shows these balances. So that's a reconciliation, and I have an entire video on balance sheet reconciliations. I'll leave a link up here. Go ahead and review that after this video. Okay, so that's in terms of internal controls. We'll move now to the next area, which is going to be systems. So let's take a look at that. All right, so the next area we're looking at is going to be systems. I break that down into three areas, ERP and system access, COA or chart of accounts, and then integrations, and that's payroll, AP, bank, T&E. All right, so let's talk about ERP and system access. So when you join a company, sometimes they have a system administrator, that's a person, an employee, that you can speak with as a controller or CFO and gain an understanding of who has the various access to ERP and other systems that the company is using. So other systems, I mean by that, accounts payable, if we're using a different accounts payable software outside of the ERP, payroll, travel and expense management, and other things like that. Other systems that the company is using beside ERP. So the level of access that every employee in the finance team has should correspond to their role. So for example, the person who is going to be closing the financial period or opening and closing the financial period has to be just one person, typically is the controller. and a backup person typically is either the accounting manager or the assistant controller, right? So you don't want to have all of the employees on a finance team having that access level that can open and close the financial period, because that can cause chaos when someone accidentally opens or closes the financial period and the transactions go into the period after that or going in the wrong period. So you want to have a detailed review of the system access. That's going to be pretty important, right? And if it's not documented, then that's going to be your next mandate, is to document these things. Have a document that shows who has access to which systems. The next area is going to be COA, or chart of accounts. So a chart of accounts is the way that the company organizes its business transactions. So you want to download that from the ERP software and have a look. What you're looking for is that the chart of accounts has enough detail in it to support the business. So for example, with revenue, you want to make sure that there is, for every line of business that the company has, or every type of product has its own account on the chart of accounts, and that account is linked to a product in the billing side of the ERP, right? So you want to review the chart of accounts, see it has enough detail, things like payroll, for example. You want to make sure that there are different accounts to support the various types of items on the payroll, such as payroll taxes or social benefits if you're in Europe. Things like tax liability, things like workers' compensation, pension, or 401k in the US. The various items that hit payroll needs to be supported with different accounts on the chart of accounts. The next area is integrations. So integrations is a way to automate transactions so that you're cutting down on the amount of time and cutting down on errors. So you're connecting, for example, a payroll system like ADP directly to your ERP software so that the payroll is booked automatically into ERP, right? So you want to review that by speaking to either the system administrator or speaking to the person who's going to be your right hand or second in command, the assistant controller, for example, and understanding what integrations we have today, because that's going to be your next mandate, is looking what can be done to create integrations in the future. So things like payroll, AP, bank feed, travel and expense management, that should be all managed with integrations rather than manual entry. Okay, so that is for systems. Let's go ahead and take a look at month end, which is the next area. All right, so the next area is going to be month end, and that is based on the accounting principle of the accounting period or the financial period, which means that you want to look at an accounting period, and that usually is a month or a quarter or a year. So typically a company reports financial internally to management monthly, and then to stakeholders such as investors quarterly and annually. So we look at month end as a CFO or controller to ensure that we have a good process that is timely and efficient and accurate. So the first thing I want to look at is the number of days. So when you start at a company, you might find that they're closing the books in 5 days, which is great. That means they have an efficient process for closing the books, and you can trust it to give timely financial reporting. But if you look at that number and that is, for example, 15 days, that's a lot, right? So that's going to be your next mandate, is to work over the next 6 months or 9 months to reduce this 15 days closer to 5 days in closing the books and records. And that's going to be using a checklist for closing the books. And I've made a video on that. I'm going to leave a link up here somewhere on how to develop a checklist for month-end close. All right, so you want to look at the existing checklist, and if you don't have one, you need to begin working on one, right? And then you look at the management report, what we provide management of month end, and that's going to include a report that has a fluctuation analysis and actual versus budget analysis with commentary on that. So you want to review the most recent report and look at what kind of information the team is providing to management and whether you can add maybe to it based on your knowledge from before. So that is month end. The next area is going to be people. Let's take a look at that. All right, so with people, these are the relationships that you're going to be creating when you first join the company that's going to help you do a great job. And I list here C-level and VPs because these are going to have the biggest impact on the business. And this doesn't mean that you don't create relationships with other employees around the company. Quite the opposite. You should be, having a coffee or having a quick catch up with different people around the company. It doesn't have to be C-level and VPs, but I just write this here at the bare minimum. You need to be speaking to these folks, heads of departments, and specifically the sales department, HR department, engineering. These are the departments that are going to be very impactful to your role as a controller or CFO, as they're going to help you understand the business more. And these are typically the departments that are transacting the most. So the sales department is transacting in terms of revenue, in terms of hiring. The other departments such as HR is obviously involved in headcount planning and hiring. Other teams like engineering, they purchase software, they hire employees, they drive the product that we sell as a company, or the software that helps us sell our inventory. So these are folks that you're going to want to talk to that are going to help you in your role. Then auditors and tax folks. These are people you want to have an initial conversation with. An initial conversation could be just an introduction, right? So the initial conversation shouldn't be one to talk about the pain points or the issues with the previous audit. This should be just an introduction, just who you are and your background, their background, where they worked before and what they do now, and things like that, right? So you want to speak to the auditors and create a relationship with them. Same thing with your tax consultants. If you're using an outside tax accounting firm, so you want to speak to them, create that relationship as well, and also understand the cadence by which they are filing and doing things like that for the company. Bank reps. So typically a company has one primary banking relationship or two sometimes. You want to speak with the bank reps so that when issues arise, you know who to contact. And things like that. So that's in terms of people. Again, relationships are going to help you succeed in the role because they teach you about the business. They teach you about the different needs and transactions the people are conducting around the company. So establishing relationships is going to be pretty important. The next area is going to be compliance. So let's take a look at that. All right, so the next area is going to be compliance. And as you can see, when we talk about compliance, we're going to see the word tax a lot, tax, and tax, right? Because this is what the government really wants from you. It wants your money at the end of the day. So a lot of the compliance work is going to be related to taxation. So the first area is sales tax, and then income tax, and then other types of reporting and taxes. So with sales tax and VAT, if you're in Europe and other parts of the world, it could be GST if you're in Canada. So with sales tax, VAT, and GST, you want to understand the lay of the land, whether your product is subject to these taxations. So in the US, for example, you have to look at state by state. It's a little bit painful in the US because, for example, in UK, it's easier. There's VAT, and that's that, and it's a pass-through. With the United States, sales tax is based on the nexus in a specific state, whether you have headquarters, whether you have customers there, how much each customer you're selling to, is your product type taxable in that state. So you want to look at that and see if the company has that figured out, because if that piece is not figured out yet, then it's going to be on you to figure it out and figure out a process for whether or not the product is taxable in which states, and whether you have VAT, GST, collection liability, and whether if we have GST or VAT, whether we are doing the other way, collecting or paying the vendor and reporting these amounts on our VAT reports, right? So you want to make sure that this process is working, and if it's not, you need to work on it to make it work efficiently. The next area is going to be income tax and estimated payments. So if you have an in-house person for taxation, you have a conversation with them and understand how that works. If not, you were using an outside tax firm, you want to have a conversation with them and understand the cadence by which we estimate our payments and make the estimated payments, and the cadence we file with the government. Other areas of taxation is going to include franchise tax. Franchise tax in the US, at least, is based on location of incorporation, so of the state of incorporation A lot of times it's Delaware because it's the friendliest in terms of incorporation rules. You're going to have a franchise tax to pay there and an annual report to go along with that. Sometimes you have real estate taxation depending on location. I know New York City, for example, has a real estate tax. Even if you're renting, you have a real estate tax in most cases. So that's in terms of compliance. The next area is going to be the roadmap, the 90-day roadmap, which is going to be really a summary of all of the things that we talked about. All right, so the last part we're going to talk about is going to be the 90-day roadmap. So what I mean by that is a document. So the 90-day roadmap is an actual document that you're going to create, right? Like a Word document that's going to detail your findings based on all of the areas that we talked about today, which is financial review, budget, internal controls, systems, and it's all detailed in the document that I'm leaving for free in the description. Make sure you download that. So with the 90-day roadmap, what I mean by that is that we've made a study in the 30-day analysis that we've done in our first 30 days as a controller or CFO. And now I'm ready to draft a 90-day roadmap that says, in the budget area, communication needs to be XYZ. So I'm going to create an action item for me to work on budget, right? Budget communication, right? Internal controls. I found that the access to ERP isn't tight enough. So I'm going to have ERP access as an area to work on, right? And so on and so forth. So you make a detailed plan based on the 30-day analysis to create a 90-day roadmap for you to succeed in the role. And again, everything is in this document here. Download it and have a look at it. I had a lot of fun teaching you this video. If you know someone who will learn from this or starting a new role or about to start a new one, share this video with them so they can learn from it. And I'll see you in the next video.